Good morning. Dear listeners, welcome to Linas Agro Group meeting with investors. I'm Emilia from Nasdaq Vilnius, and I'm delighted to be the moderator for today's event. We will start with a presentation from the management, which will be followed by the Q&A session. As always, I encourage every one of you to ask questions during or after the presentation in the question box of your screen. With that said, I'm pleased to introduce today's presenter, the Finance Director of Linas Agro Group, Mažvydas Šileika. Mr. Šileika, please, the floor is yours and good luck.
Good morning, everyone, and welcome to Linas Agro Group investor webinar for the financial year 2021. My name is Mažvydas Šileika. I'm the CFO of Linas Agro Group, and I will take you today through the presentation. I would like to start firstly with a snapshot of the group. How does it look at the end of June 2021? And we have reached this last financial year almost 1 billion euros in turnover. It's 900 and almost 50 million euros in sales revenue. Our EBITDA last year is 33.5 million euros, and we reached almost 150 million in market capitalization. There are no changes as of end of June in terms of the grain elevator capacity we were owning, as well as the hectares of arable land we were managing. We have reached a record high volumes of grain and feedstuff traded. It's 3.16 million tons of grain and various feedstuff traded last year, and this is the biggest or the highest result of the group achieved so far in its history. Regarding the developments of the group this year, we have reached, as I mentioned before, a record high revenue. This, of course, was based on very high Baltic grain last season. And the main developments in the group was that we have started operating a agri startup GeoPhase. We have opened a subsidiary in Estonia, and not the last, of course, thing, but in the middle of July this year, we have closed a very big transaction for the group and acquired Kauno Grūdai Group. In terms of group structure, there were no significant changes. Last financial year, as mentioned before, we opened a subsidiary in Estonia, which is called Linas Agro OU. We have formed around 1 million euros of equity for that company. We are further working on simplifying group structure, and we are aiming to combine three companies which are owning grain elevators to achieve synergies in administration and management, and that will be done this financial year. There are no other changes as of end of June for the group structure as it is. You can see it in the slides. We were managing 42 companies in 4 countries. There are no major changes in the segments. We have more or less kept the same segments and their performance throughout the year. The biggest segments in terms of sales revenue remain grain and feedstuff handling. It still comprises around 67% of all group's revenue. However, we had very positive growth both in products and services for farming segment in terms of sales, as well as agricultural production. However, if we look at from the perspective of operating profit, the view is a bit different. The highest contributor this year was agricultural production segment, which actually delivered the all-time high EBIT for the group. It was 11.4 million euros. Products and services for farming also showed very strong results, and they delivered 8 million euros in operating profit. Grain and feedstuff handling was third segment in terms of operating profit for the group, and it delivered 6.1 million. Unfortunately, food product segment was not profitable this year, and we have marked a negative 2 million euros in operating profit. Main developments in each segment are as follows. we have we're going further to develop the smart or intelligent agri app for the farmers called GeoFace. We continues our effort towards to expand our rent machinery portfolio. In agricultural production segment, we are really very active in managing our land portfolio, meaning that we are looking for new or efficient land plots to acquire. We're also looking which of the plants we hold, land plots we hold, we would like to sell. And we hope to achieve synergies here. We are also investing in the segment quite a lot to efficiency, to robotization, to increase the profitability of the segment. Grain and feedstuff handling segment looking forward has a lot of positive outlook and challenges regarding the synergies from the newly combined entity with Kauno Grūdai. One of the biggest synergies in this segment, or we are expecting, is to reach quite a lot of economies of scale. Food product segment looking forward is continuously investing in efficiencies, meaning mainly robotization, energy saving solutions, and we are looking how to expand our poultry production as well. I would like to go through the financial highlights for the consolidated group figures for year 2021. And the first slide is a bit heavy, but I will take it through the slide. You can see the going from top to down, you can see the gross profit margin every quarter and for the full year. The bars show the sales, total sales for group, and the little dot on the bar shows total cost of goods sold. The main takeaways from this slide is that group reached record high revenues for the year ended 2021. And you can see the trend that almost every year we have decreasing gross profit margins through the year, meaning starting higher in the beginning of the year. First quarter, second year are usually more profitable than the last ones. However, the last segment is very important in terms of how much revenue it generates, as well as how much operating profit it delivers. Overall, the margins in the market are still decreasing, even though this year is better than the last 2 years. We see that the gross profit margin for last year is 5.4 versus 4.1 last year, or 4.2 2 years before. So the profitability has restored a bit this year versus previous years. Next slide is very similar. Going from top to bottom, you can see operating profit margin. The bars show how much operating profit is delivered, and then you can see the dots of total OPEX of the group. The trend is very similar as with cost of goods sold, or the gross profitability, is that through the last few years it really has been squeezed. However, you can see that the last year, year 2021, we have managed to restore part of the profitability, and the operating profit margin is 2.1 versus 0.7 last year and 1.1 2 years ago. Even though we see pressure coming from the market, from the prices, I think it's a really good result that we are keeping more or less the operating costs flat. It varies a bit or fluctuates a bit year from year, but in the year-end result, it remains quite stable. This year is maybe a bit more out of order because we had ongoing acquisition, which of course had extra costs carrying on its behalf, meaning lawyers, advisory costs, and etc. What is really noticeable in the last year results that the products and services for farming, as well as agri production segments, delivered very substantial chunk of the operating profit last year. I would like to move to the Next slide, which is showing our balance sheet quality. As you remember and you know that our main balance sheet compromises of current assets, mainly inventory and trade receivables from farmers. That hasn't changed last financial year as well, even though we have managed to decrease the balance sheet quite a lot by the end of the last year. You can see that on the slide, and we still remain a very healthy ratio between our short-term lines and ready marketable inventory, which are basically commodities on our balance sheet. We have secured around 140 million in credit facilities for this trading season. Group is fully covered with financing so far. Equity position of the group has increased further. Equity is around 196 million, capital ratio 47%, and net financial debt with EBITDA is 3.2, one of the lowest ratio in the last 3 to 4 years. Next slide shows the profitability, the return ratios for the group. We are actually following mainly 3 ratios: return on equity, return on capital employed, as well as return on assets. Last year, we delivered, in my opinion, and very good results. We have a 7.2 return on equity, 6.5 return on capital employed, and 3.4 return on assets. As you can see from the slides, the ratios are increasing 2 years in a row, and they are now really in the higher end what we have seen historically. This actually comes from both sides. We have increased profitability, and we have one of the highest EBITDAs of the group in the last 5 to 6 years, as well as we have decreased the capital we use in the group, mainly through decreasing borrowing facilities. 5-year average, excluding the really bad 2018-19 years, for return on assets is 2.3, return on equity 4.8, and return on capital employed 3.8, meaning that we are also well above the averages for the last 2 years. The group aims to see a return on capital employed at 8% as a long-term target. The cash flow we have generated this year is quite significant and really helped throughout the year and to finalize the acquisition we have managed to complete in July. After all debt servicing, investments, and non-cash flow items, the group managed to deliver 26.4 free cash flow, and we used this surplus money to, of course, improve credit ratings. We have very low net debt ratio this year, as well as long-term debt ratio. We used this money to acquire and to partly finance acquisition of Untitled Group, because part of it was financed by borrowed funds, part of it is still financed by own group equity. We haven't paid out dividends this year as per suggestion of the management board. The dividends were withheld due to the acquisition. And I think one of the also success factors of this year is that we have managed to prioritize our investment needs, and we have decreased the capex for last year, not to hurt our operating activity or future potential, but basically by prioritizing more critical or crucial things, we have generated extra capacity of cash by decreasing the investment portfolio. The return for shareholders, as I mentioned before, the group is not paying dividend out for the last financial year. The 5-year average payout ratio is still 9%, even though the group hasn't paid dividends for the last 3 years. Market capitalization of the company is 130 million, the PE ratio 9.2. I would like to go now through each of the segment and briefly go through main developments in the segments, and I will start with products and services for farming. Main things about this segment is that before mentioned geophase have been launched this year in Lithuania and Latvia. We have started and actually finished in this September the construction of seed warehouse. And as you can see in the graph in the middle of the bottom of the slide, all product groups of this segment has showed strong sales growth last financial year. And this actually is really evident in the performance of the segment. The operating profit of the segment is one of the highest for the last 5 or 6 years. Sales have increased significantly as well to 180 million euros. Regarding profitability, it also showed very strong results. The operating profit margin for last year for this segment is 4.9 versus 2.4 last year. We have no other developments or changes in the infrastructure we hold of this segment in all 3 countries. And looking forward, we hope to see strong performance of the segment for this financial year as well. Next segment is agricultural production. This segment, as I mentioned before, has had record performance throughout the history of the group. It delivered 11 million in operating profit. Segment sold 30% more of various crops and oil seeds it produced. We have also a very positive trend in milk production. We have produced 5% more milk in terms of tons, as well as the price was favorable for us. On average, it was 4% higher than previous year. The sowings or the crop quality for this segment going forward was actually before the harvest from good to very good, but before the harvest it was labeled or downgraded to satisfactory. The segment, of course, carries a 1.9 million one-off income from sale of land holding companies last year, so it has impacted the result a bit, even though without the one-off, the segment still has delivered very strong performance for the last year. As mentioned before, there are no main changes in the amount of land we manage or the farming companies we own, and this has remained more or less stable throughout the year. Next segment is grain and feedstock handling and merchandising. This segment, as mentioned before, delivered record high sales. However, the EBIT or the operating profit has remained steady from year to year. The main thing is that the markets were really volatile this year. We had a lot of volatility in terms of price for various different grades and feedstuffs components. We had some non-deliveries by some of our suppliers, which of course made the trade more difficult. And sometimes because of the COVID restrictions, as well as different situations in the market, there were very difficult or different situations for the physical trade. Overall, we had rented an additional capacity in the port for additional transshipments, and I think that looking forward, that there will be no changes in the infrastructure going forward. However, we will see a lot of developments in this segment when we will start operating with Kauno as one entity. Food product segment. This product segment has actually suffered the most from the COVID pandemic, because the HoReCa sector has been closed for a while due to the quarantines in different countries. The overall consumption of poultry has decreased, and all the surplus poultry was actually directed to the supermarkets, where of course the buying power or the buying capacity of people has not changed that much. So the prices went down, especially having such a big producer and exporter as Poland by the border of Lithuania. On the other side, the squeeze for the profitability came from the input side, we had witnessed very high increases in feedstuff prices throughout the year. All main positions in terms of corn, wheat, soybeans, various vegetable oils have increased throughout the year. So we had a squeeze coming from both sides, from the prices we sell and from the inputs we get to produce poultry. In the last quarter of last financial year, we saw already the trend changing, meaning the prices in the market has started to increase. However, it was only for the last quarter, and it was still offset by the further increase in the feedstuff prices. So as I mentioned before, the segment delivered only 2 million less in turnover. However, the operating profit was in the negative area of 2 million. I would like to take you through some of the main aspects of the acquisition, as well as give you a glimpse how the group could look going forward at the acquisition of Kauno Grūdai. After the acquisition of Kauno Grūdai, Linas Agro Group will manage 79 companies overall in more than in 8 geographies. We have added new geographies to our portfolio. We are now owning companies in Russia, Belarus, Poland, as well as Netherlands. We haven't had companies there before. We have also grown in terms of employees. The group now consists of 5,600 employees. Previously, we had average employee count of 2,100. So the group has doubled in terms of employees after the acquisition, as well as almost double in terms of companies we are managing. I would like to also take you through a slide how a pro forma result consolidation of both groups would look. I would like to emphasize that this is not looking forward how the group is expecting to perform or to deliver results. This is mainly a slide comprising of last financial years of Linas Agro Group, as well as last financial year of Kauno Grūdai. You can see the results, last financial year results of Kauno Grūdai and other companies around Kauno Grūdai we have bought. So the sales of the entities we have acquired is almost 700 million. EBITDA for last year 33 million, net profit 5.9, balance sheet size around 320 million euros, return on equity 3.9, return on capital employed 4.6, and EBIT margin is 1.9. We have added 4 new segments to our group, or we have increased the activity mix from 6 to 11. So we added mainly food production segments of flour, instant meal, meaning porridges, noodles. We are also now owning one of the biggest feed production plants in the Baltics. We have also added some smaller businesses as veterinary and disinfection. The last year combined turnover in terms of tons or traded feedstuffs and grains would grow to 4.66 million, and we would double in terms of elevator capacity, going to 600,000 tons of grain storage capacity for the combined group. In terms of figures, the group would look as you can see on your screens. The combined group of the last financial years would look as 1.664 billion in turnover, 63.5 million in terms of EBITDA, 21.5 million in terms of net profit. The balance sheet size would grow to 720 million. The return on equity ratio would decrease from the current of Linas Agro Group to 6.2. As you can see that Kauno Grūdai Group has a lower return on equity ratio due to lower net profit. Return on capital employed actually remains quite stable at 6.9, as the group of Kauno Grūdai is using less borrowed capital in their operations. We are more a production company, a food production company, than actually a trader as Linas Agro Group. EBIT margin would be quite stable at 2.1%. What are main tasks of the management or of the whole group looking forward when we acquired Kona Today? So we're going now through a integration phase, which should last for around 2 years. We are aligning Kona Today financial year to our accounting practices, risk policies. Kona Today brands will be left, of course, to capitalize on the market share and know-how and recognitions. Synergies should be achieved due to higher vertical integration as well as optimized overlapping activities. We have actually allocated around 13 million of additional investment for the synergies to achieve, which should be distributed throughout the 2 years. Key gains of the acquisition, in our opinion and our calculations, we're the #1 agri business and food company now in the Baltics. In terms of turnover, we became the biggest listed company on Nasdaq Baltic Stock Exchange. We see a very big uplift in volumes, which enables us to compete on the European scale. We have now a positive and a healthy sales mix, meaning we will have more sales of branded food products than previously. This gives more stability. We will also add new products to the market. We will have new areas to operate and, of course, capitalize on vertical integration. We see that the combined debt level of the group after even the acquisition loan will decrease. And we see that the post-merger Linas Agro Group multiple is lower than pre-merger. This is basically indicating benefit for the existing Linas Agro Group shareholders, which actually this slide is showing now. Market capitalization of Linas Agro Group before the acquisition, 152 million. Net debt of the last financial year of 108 million. Enterprise, that gives an enterprise value of 260, EBITDA 33.5 million, and a multiple of 7.8. The Kona Today, the price we paid for the equity 73.5 million. Net debt of the last financial year, which is actually comparable to 108 of Linas Agro Group, is 70. That gives an enterprise value of 143 million euros. EBITDA of all entities we have acquired is 33 million, which gives the multiple of 4.3, meaning that the combined enterprise value of this group is almost 450 million with EBITDA of 66.5, and this gives a multiple of 6.8. For the closing remarks, looking forward, what we're expecting for this financial year, which actually is already ongoing. Of course, we are focusing on obtaining all the synergies from the acquisition of Kona Today. We will have very high focus for the sustainability going forward, not only this year, but the next coming years as well. We are looking to put extra time, resources, and attention to GeoFace, our intelligent farming app. We also are looking to manage our land portfolio very actively, and to give you a taste how is looking how potentially the next harvest can be looking from only today's perspective is that winter sowing, fertilizing, and spraying completed in time. Crop growth considered is so far good. In terms of main events after the reporting is that we have announced the acquisition of the group, Kona Today Group, in the mid of July. We have received financing for this acquisition from the three syndicated banks of 46.3 million. The other part in between of the price is paid by own group money. We started the integration. Nova Baltic has completed its seed warehouse construction in September, which will increase the production capacities of quantities by 30%. And we have also decided to acquire a company, Agro Logistics Service, which works in composition with Kauno Grūdai. And we have already received the approval from the Lithuanian Competition Council to do that. We are now waiting for the same approval from the Polish competition authorities. We hope to close this acquisition by the end of calendar year. That was so far from my side. Thank you for listening, and I will.
Thank you very much for the comprehensive presentation. And of course, now we will proceed with the questions. But before that, I would like to remind all the attendees that you are very much welcome to send in your questions in the question box of your screen, and I will read them out loud. So let's proceed. And the first question would be as following. In 2021 report, there is written group goal to achieve minimum 3% operating margin for next year. May you estimate what net profit is expected for 21-22 year? Thank you.
Thank you for the questions. Yeah, this is our long-term aim to deliver a 3% operating margin for the whole group, meaning the new combined group. As you see, it may still be around 2.1, 2.3% as per last financial results. However, we are not yet in the position to give a forward-looking statements regarding group profit for the financial year, which is actually happening now.
Thank you very much for your answer. And could you please comment on, do you have plans for KeyJ to remain as a separate company or merge with the Linas Agro Group? Thank you.
Kauno Grūdai will remain as a separate company as a going concern. It has its own activities, which it will remain performing. Some parts of the business, of course, due to the possible synergies, will work as one combined entity. But Kauno Grūdai, as a legal separate entity with its business stream, will remain operating.
Thank you very much. I would like to take a chance to remind everyone of you that your questions are very welcome to the question box of your screen. And the next question would be as following. Does Linas Agro Group has an obligation to remove operational business from Kaunas Center? Thank you.
No, the Linas Agro Group has no such obligation to remove the operations from Kaunas location where it is now. Thank you for the question.
Thank you very much. The next question would be as following. In grain segment, do historically high crop prices provide more profit chance or more of burden? How does hedging work in these volatile grain prices? Thank you.
Thank you for the question. The short answer would be no, not necessarily. High grain prices give higher profitability for the trading segment because we are trading a margin as a trading margin business. So it's more depending on the global grain situation, price, setup, the physical condition of the grain. However, there are negative effects of that due to high prices. We actually, if we are still buying the same quantities, we need more working capital, basically more cash, more money to buy the same amount of grain. So we need actually to have more funds prepared for that. In terms of hedging, the hedging also works on margin. You know, we are basically hedging a margin for the grain. However, as with the working capital, hedging instruments actually require more money as well to perform the hedge itself.
Thank you very much. And could you please explain why preliminary profit to loss result does not match the audited result? Thank you.
Yeah, the main difference or changes after the audit is related with biological asset revaluation effect. Basically, the effect of biological asset revaluation was revised downward. It was mainly in the food production segment related with the asset value of chicken. And there were some other minor changes regarding operating expenses and taxes, but they were really minor. The main effect comes from biological asset valuation in the food segment.
Thank you very much. We're still receiving quite a few questions, so let's proceed. And the next one would be as following. Are you planning to calculate alternative net debt to EBITDA ratio with discounted inventories added to cash figure? Thank you.
Yes, we will move towards this additional alternative ratio in our reports. We will do that as soon as we will fully integrate Kronograd into our reporting, and with the next reporting period where we are producing alternative ratios, we will show this ratio as well.
Thank you very much. The next question would be as following. The company was recently acquired. What amount of losses this S2T investment brought to Linas Agro Group? Thank you.
If I correctly understand the question, with the first quarter reporting, which will be in the end of November, we will actually produce a purchase price allocation, which will be reported in our reports, and you will be able to see what is the net effect of the acquisition in terms of the price paid and the assets we acquired. Currently, I would like to comment more, as this is still under ongoing calculations.
Thank you very much for the explanation. And another investor is asking, Linas Agro Group can't expand acquiring land plots in Lithuania for restrictions, but maybe you have plans in Latvia. Thank you.
No, so far we don't have plans in Latvia. We never know what can happen in the future. However, there are no such discussions currently in the group management. Linas Agro Group can acquire land as much as it has cows. So basically, we can expand our land plots, but it has to be in ratio or together going with expansion of our cow herds.
Thank you very much. And could you please give a comment on the current prices of poultry meat? Thank you.
Yeah, the current poultry prices, they are still quite volatile. Actually, the price trend upwards, which started in the fourth quarter of last financial year, remained through the first quarter of this financial year. However, we see that the input prices, meaning feedstuff prices as well as energy prices, gas and electricity, has also increased significantly, meaning that the squeeze going from the bottom of the input prices is still very high, and the pressure for the segment actually remains.
Thank you very much. The next question would be as following. The loss from derivatives is 0.6 million euros. Where it comes from? Is it permanent hedging cost rather than one-off? Thank you.
Yes, thank you for the question. This is one of cause of hedging foreign currency due to some non-deliveries of the contracts. They were actually secured by a currency hedge. When the contracts were not delivered, the foreign currency hedge became speculative, and we have received a loss from that account. This is not something continuous. This is completely related to a specific situation and a specific contract.
Thank you very much. Another attendee is asking about your plans to sell, if you have any plans to sell part of the land owned. Thank you.
So far, there are no major plans, meaning in the same scale as we did last November, to sell such an amount of land plots. As I mentioned before, the active management of portfolio is happening regularly. However, so far in such a big scale as previously, we have not discussed or decided or planning.
Thank you very much. I would like to take a chance to remind all the attendees that you are very welcome to send in your questions in the question box of your screen. And the next question would be as following. Could you please confirm that the next quarter will be reported including the acquired Kaunas Grūdai companies? Thank you.
Yes, the first quarter of 21-22, which will be delivered in the end of November, will include the first quarter of Linas Agro Group, as you already know. Additionally, as well, one quarter of Kaunas Grūdai Group, which we acquired. So it will be already a fully consolidated combined one quarter of the new group.
Thank you very much. And do you expect all poultry segment to be profitable in full 21-22 year? Thank you.
That's a very good question. Thank you very much. It's really still hard to say now, and I would not like to speculate regarding the group results for the ongoing financial year.
Thank you very much. It looks like we have covered all the questions for the today. So on behalf of Linas Agro Group and Nasdaq Vilnius, thank you everyone. It was our pleasure being with you today. The recording of the presentation will be available in the Nasdaq Baltic YouTube channel. Dear management, thank you very much and have a good day everyone and goodbye.
Thank you very much. Goodbye.